Hey gang, today is Wednesday, the 24th of July. Where is the month going, right? Where's the year going? All right. S&P futures are slightly down before the open. We had a really strong day because there was news that China and US were going to start working things out again. We've heard this song and dance before and nothing happens. There hasn't been any progress at all from China nor US side in terms of tariffs. And all these talks, we're going to have talks, we're going to have talks. It pushes the market higher, but then nothing happens. And as evident, the market is down today. Now, we're going to have Mueller testimony today. That may impact the stock market. Tomorrow, we have jobless claims. We're expecting about 221,000 numbers. And Friday, we have the big GDP report. But I wanted to show you something cool today. I wanted to show you market internals. Now, here's where I'm going with this. I've done this a few times for my premium clients, and I want to explain it to you as well. When you're looking at the S&P 500, when you're looking at this asset, you're seeing technical price action, right? We're right around the 3,000. And if you look at the SPY ETF, it's exactly the same. So it doesn't matter if we're looking at the SPY or we're looking at the E-mini futures. They're right around the same. They have a correlation of about 90%, okay? So it's showing us the markets are strong. It's showing us the markets are at new highs, all that good stuff. But here, I think we're going to go right back to the 280 level. And let me show you why. This graph, market technicals, it doesn't take into account market capitalization. In other words, U.S. stock markets, U.S. stocks are capital weighted. So Apple, for example, Apple has 10 times more influence in this sector, in this index, than a small cap stock, a smaller stock, not a small cap stocks. There's no small cap stocks in the S&P 500. My point is that some stocks have a lot more control over this index than others. That's why it's really good to look at it internally. Open it up and look at it internally from a percentage basis. Because if you look at see what percentage of stocks are moving higher or lower, you'll get a totally different perspective on the market. So we go here to stocks, we go here to market momentum, and we'll just cut to the chase. We'll go right to the S&P index. And I wanted to really show you this because this is pretty eye-opening. This is the number of stocks in the S&P 500 that are above the 50-day moving average. I want you to see this number. And I'll go ahead and I'll put this on a line chart. Here, let me change the settings here. Line chart, here we go. So you could see here what I'm talking about. Now, let me go, this is 3 years and this is weekly. Notice what happens every time 70% of stocks in the S&P cross above the 50-day moving average. We usually, and we went as high as 83. Notice what happens every time we cross that 70 line. We come down. And this is a weekly basis. So let's look at it 10 years, all right? Same thing, right? Look at that. So how much higher do you think we're going to go? We're already at 77%. 77% of stocks in the S&P 500 are trading above the 50-day moving average. That's overbought. Can't go much higher before we're coming down. Don't believe me? Look at data over the last 10 years. This is very, very powerful. Folks, this is a free video, but this is very powerful. Now, let me show you the 200-day. Let's go to the 200-day. This is a 10-year chart. Look at a 20-year chart. Notice we're coming off a little bit down here. Momentum is narrowing. This is right now 72.85% of stocks in the S&P are trading above the 200-day moving average. And it looks like we're going to come down. And if that happens, and if what I'm anticipating to happen does happen, it's going to easily, this is a weekly chart. Let me look at the monthly chart. All these pop-up ads. It's going to easily put us at the 290-ish, right around the 290 level. That's our first point of support. right around the 290, and I've been saying this number for weeks now. And then if we really break down, we'll go all the way to 275. Let me go ahead and change the settings back to normal charts. And let me put a study on. Let me put a 50-day moving average on, just to give you a feel for where it is. And guess what? The 50-day moving average is right there, and I'll bet you the 200-day moving average is right around here. So again, be very cautious right now. We still have earnings. Earnings are slightly better than expected, but the estimates are so low over the past several quarters that it would be hard for them not to be better than expected. Again, I'm not seeing a bear market. I'm just seeing a little cool off. Markets are too strong. And if you look at the RSI, it has 3 overbought heads, and we're now coming back to the 4th one, and it looks like the 4th one usually comes down. So I want to see it more at the neutral to oversold level than overbought. And again, I think we're going to go to the 290 level before we head higher, and possibly to the 270. Again, it's the 24th of July. We have Mueller testimony today. We have we have jobless claims tomorrow, and we have GDP on Friday. We're expecting 2.1%. If the number's below 2.1%, Fed is going to have a good case for lowering rates. If we're growing faster than 2.1%, the Fed is going to have an issue. Talk to you guys soon. It's going to be an amazing next few days, because we got Mueller, we got jobless claims, we have GDP. The market's going to set a tone, and earnings are really cranking out this week, broad base. So it's an interesting time to be in the market. Expect volatility to rise. If you guys enjoyed this, subscribe to the Market Geeks channel. Talk to you soon.